Intel stock is up 60% over the past year, recovering to prices not seen since the 2022 crash started. However, Intel's actual earnings are far, far worse than their recent stock price performance. 2022 annual net income was down over 60% from fiscal 2021. Fiscal 2023 is not yet fully reported, but it's on pace for an even worse year. On top of this, Intel's free cash flow has plunged deeply negative, soon to be for the second year in a row. Intel is making less money than ever and spending more than ever. This led to them cutting their long-growing dividend payment in 2023. That was a 65% reduction. So why is the rise in Intel's stock price happening? Well, there are some promising long-term business developments, such as investing in new domestic manufacturing capacity, getting closer to cutting-edge process technology from ASML, and the possibility of a new foundry business model where they manufacture chips for others. However, all of these are still years away. They are certainly far from being a positive contributor to Intel's bottom line. I believe the real reason for Intel's rapid rise in stock price has to do with the broader market environment, specifically the massive momentum of cash flowing into semiconductor stocks. This is in the hope of owning part of the AI boom. In today's video, I'm going to provide an updated look at Intel's stock and explain why I think it is now overvalued in 2024. Ultimately, I'll share how Intel's stock price may have become divorced from reality and swept up into the AI craze. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoyed the video. Throughout, I'll be using the stock research tool I personally developed, which is available at dividenddata.com. Here you can do deep financial analysis on individual stocks, helping you find better investments. Link in the description and pinned comment. Intel has been caught up with the broader semiconductor market momentum. Personally, I think it's obvious that ETFs and mutual funds have played a large role in this price increase. Since the AI boom, investors have been thematically placing bets on the sector, hoping to gain exposure to AI-related gains. Semiconductors are just one part of that movement. There are countless investors and institutions taking an AI thematic approach and putting big money into these funds. Frankly, there are not that many large semiconductor companies, so Intel is a top holding in most of these funds. I'll give just a couple of examples. The iShares Semiconductor ETF, ticker symbol SOXX, has $10.2 billion in assets under management. It's up 50% over the past year. Intel is the fifth largest holding at 6.22%. The VanEck Semiconductor ETF, ticker symbol SMH, has $11.85 billion in assets under management. It's up 58.89% over the past year. Intel is the fifth largest holding at 5.21%. There are many more examples. Overall, more money is flowing into semiconductor stocks. A rising tide lifts all boats, even Intel. However, not all semiconductor stocks are created equal. In reality, Nvidia is the only stock in the sector to receive a dramatic outsized economic benefit from the AI boom. Their core business of GPUs is directly built around this advancement. Nvidia, ticker symbol NVDA, has seen rapid earnings growth over the past year. This past quarter, they earned $7 billion in free cash flow. Margins have expanded with 74% gross margins and 51% net margins. The business is highly capital efficient as they outsource manufacturing. This means they don't bear any of the massive investment required. Compared to manufacturing companies like Intel, Nvidia has a far, far better economic model. They are also directly exposed to and driving the AI innovation. For context, Intel spends a minimum of $5 billion a quarter in capital expenditures. This eats up all of their cash from operations, driving free cash flow negative. That means there is nothing to reward shareholders with. Aside from these core economic differences, Intel is barely even in the AI market in comparison to Nvidia. The overwhelming majority of Intel's business is CPUs for PCs and data center. PC is a very important segment, but it's mature and slow growth at best. PC sales are down for 8 quarters in a row following the work from home surge in sales. On top of this, they face a fierce competition with AMD in this space. The data centers where all this AI spend is happening, but they are getting their butt kicked by Nvidia. It's not even close. Most of the new AI data center spend is going to Nvidia with their growing data center solutions. That said, Intel is hoping to be a player in AI, moving towards that direction. They've even renamed some of their company sectors to reflect this, putting AI in the title. However, the reality is that's not what the business is today. Intel is not the only overvalued semiconductor stock. In fact, I'd argue that most are in 2024. AMD has seen an all-time high in stock price despite declining earnings. Broadcom, ticker symbol AVGO has continued earnings growth but seen a massive surge in price. So far, that price increase has far exceeded the improvements in their bottom line. If you follow me, you'll know that Broadcom is one of my top stocks in my dividend growth portfolio. It's a great business. However, you can definitely make the argument that it's overvalued. My expectations are that 2024 will be a weak year for the stock price. I'm not selling though, as this is a long-term holding. I will continue to reinvest earned dividends. Intel is by no means done as a company. It will continue to be important to the world economy for decades to come. I root for Intel. PC sales will eventually pick up from this slump. Long term, there is a lot of potential for them to grow, especially in the new foundry business model. However, that will take many years and possibly decades to become economically significant. In my view, it's very hard to make the argument to buy Intel stock at current prices. The stock market is a world of opportunity cost. Why invest in Intel when there are many options with far better economics, competitive advantages, and growth potential, especially at this price? If you want to learn more about the semiconductor market and how it relates to AI, then I suggest you watch my Nvidia stock review video. It is one of the most well-researched videos I've ever made. Link in the description and on the end screen. Make sure to leave a like, share, and subscribe to the channel if this video provided value. Sign up for dividenddata.com to use the research tool I've been showing throughout. If the software helps you identify just one slightly better investment, then it pays for itself. Thanks for watching.